Now, as you have noticed, most of the stocks here in South Africa are dropping, presenting a good opportunity for retail investor like you and me to probably go in and load the boat. I mean, some of these stocks are top quality stocks, meaning that their fundamentals are so strong, which is why me personally, when some of the retail investors locally are panicking, I just went in the market and bought or increased my holdings on these two stocks. Now, before we get deep into this video, please note that this video is just an entertainment video and you should not take it as a professional financial advice video. Otherwise, if you seek professional financial advice, you already know what to do by now. That is, you need to go out there and consult the professionals. Now, please, if you enjoyed this video, please don't forget to hit that like button, as it helps with the YouTube algorithm, and hit that subscribe button if you have not subscribed to the channel already. And once you subscribe, don't forget to hit that notification bell so that you don't miss the good content that we produce almost on a day-to-day basis on this channel. So as I've said, as so many stocks, or most of the stocks in the JSE are dropping, I went in and bought these two stocks, or added or load more positions on these two stocks, because I already owned this stock. But what I just did is that when I saw that their share prices were dropping further down, I just went in and load the boat. And of course, some of you that follow me on my Facebook, or that have me as their friend on Facebook, you will notice that I did share some screenshots in some of the company, or in one of the companies that I'll be discussing here, which I added or loaded the boat simply because I saw that the share price was dropping. Now, without a waste of time, the first company, or company number one, which by the way, after I bought, I did share a screenshot of the transaction, not of course necessarily showing how much shares I bought and by how much, but just to show that I bought that stock, maybe showing a glimpse of the transactions here and there, just to show you that I indeed bought that company. And that company, after I loaded more, it went up on Friday, I think by 8%. And again, those that follow me on my Facebook, you already know the company. And of course, to those that don't, the company goes by the name of Sibanye-Stillwater. Now, of course, as I've said, this company I owned, this is one of the company that I already owned, but I had not bought sort of like enough shares on this company. I've always wanted to buy more shares, but those of you that have been following me, you know that I buy more US stocks than local stocks. So I've always wanted to buy, but every time I get some money, I would always transfer the money that side to try to buy some of the US stocks, or some of the stocks which are listed in the New York Stock Exchange. But this time around on Friday, after I sold one of the company I owned, I went in and increased my holdings on this Sibanye-Stillwater. Now, yesterday, you'll notice that Sibanye was down almost 2%, which is something that, again, it's presenting some good opportunities, which on my side, unfortunately, now I'm out of funds. I'll probably load more when I get some funds, but it is presenting yet another opportunity for some retail investors to go in and probably load the board, because this is a stock, ladies and gents, that its fundamentals are quite strong. This is a stock that, even when you look on their finances, it's a stock that is doing quite well. I mean, this company, from their 6 months financials, or from the 6 months financial which ended in December of 2021, you'll notice that this company reported a profit of around 33 billion rands, which was up 13%, which this is something that must just be taken as a very good sign to say that this is a company that's doing well, because if they are reporting a better, or they reported a better profit than the profit they had reported in 2020 or December of 2020, is something that is truly amazing. Because like what I always say, I think it's important that as an investor in the companies you invest, you track as to if their revenues or their profits are increasing, because if they are increasing, then that just simply means that the services or products they sell or offer are in demand, and chances are they are still going to be in demand in the future, which in this case, it just tells me that the services that this Sibanye-Stillwater offers are going to be in demand even in the years to come, which one of the main things that they do, of course, this is a gold mining company, which is something that it's going to be in demand, of course, in the years to come. I mean, still on those 6 months financials which ended in December, they reported a headline earnings of around 36.9 billion rands, which represented a 27% increase year over year. Again, this just has to show you that this is a company that is doing quite well. Now, one of the things that, of course, attracted me even further to invest into this company is also their balance sheet. I mean, you'll notice that Sibanye, in those financial ended in December of 2021, they reported a net cash of around 11.5 billion rand. Now, this is another thing that, of course, encouraged me to invest in Sibanye, because a company with a strong balance sheet, it is perceived to perform well in the future. As you know, that this net cash, it offers the highest level of liquidity in terms of short-term obligations and operating expenses, which is something that has to be taken as a good thing when finding or seeing a company with such a good balance sheet. I mean, recently you'll notice that this company just paid us some wonderful dividends. We received some good dividends from Sibanye. I think it was a week or two ago, which I must say that I was very, very excited when I got those dividends. I mean, it's not many companies that pay such good dividends. I mean, I was very impressed by the kind of dividends they paid out. Now, you'll notice that this company has a 52-week low of around 44 rands with a 52-week high of 80 or around 80 rands. Now, this company currently has a PE ratio of over 4.7, which is something that must just show you that chances are that this company or a company like Sibanye is undervalued, because this low PE ratio just definitely probably means that a company especially like Thungela, which is profitable and doing so well, I mean, there's one thing that probably you can conclude without even checking its PS, and that is, I mean, chances are high that it's undervalued. Without a waste of time, company number 2, which I added more, in fact, this one I think I added yesterday, is a company that goes by the name of Naspers. Now, you'll know that Naspers is a company that I've discussed a lot on this channel. Now it is becoming that popular company on this channel. It's a company that I found myself discussing quite a number of times, which is something that I think it makes sense, because it's one of those companies that are seriously undervalued right now, because its share prices has fallen so sharply. I mean, if you notice or see on the screen, you'll notice that this company has a 52-week high of 30,579, meaning that 52 weeks ago, or in exactly a year ago, this stock or this company was trading over 3,500. And looking at the fact that this company now is trading around 1,600 is something that must just show you that this company's shares has been dropping sharply. Now, the good thing about this company is that though its shares have been dropping sharply, its fundamentals continue to be strong. They continue to do well financially, and probably one of the reasons why this stock has fallen so sharply, I've discussed with you on one of my previous videos, and that is, of course, they own one of the technology company called Tencent. Now, Tencent, you will know by now that Naspers owned around 29% of that company. And you'll notice that in China, beginning of last year, China imposed some serious crackdowns on tech stocks and educational stocks, which resulted in the tech stocks falling sharply, including this Tencent. And of course, in China, there were other issues. Crackdowns were not the only issue. There were also issues of delisting fears, indicating that all the stocks that are listed in the New York Stock Exchange might face delisting, which that not only did it drag stocks which are listed in the New York Stock Exchange, which are from China, but it also impacted those that are not listed in the New York Stock Exchange. So this is something that resulted in the shares of Tencent to even fall or dropped further. Now, again, one of the good things about those stocks in China, those that are listed in the New York Stock Exchange, is that we have been receiving wonderful articles from the regulators indicating that those stocks, chances are very high that they won't be delisted. They will try to find a solid ground with the US regulators to make sure that those stocks will remain listed. In fact, what China is doing right now is encouraging more of the Chinese companies to go and list in the New York Stock Exchange, which is something that is truly amazing and must just show you that those stocks are still, or most of the stocks that are trading in the New York Stock Exchange are still going to remain there even in the years to come. Now, one of the things, of course, that makes me to stick for a longer term into this Naspers stock is for a fact that last year, for the total or for the 2021 annual financials, they reported a 32% increase in their revenue. I mean, their revenue grew to about $29.6 billion, which is something that is truly amazing. Yeah, so yes, Naspers reports or their financials are in dollars, so you can see how good or how massive these revenues are. I mean, already you remember that there was a point in time where there were some big headlines saying that Naspers is just too big for the JSE. I mean, Naspers is a very big mega cap stock trading in the JSE or Johannesburg Stock Exchange, and this is a company that's doing very well, and it's a company that is going to continue to do well even in the years to come. I mean, still on those financials or annual report, they reported a $3.5 billion in headline earnings, which represented a 21% increase year over year. This again just has to show you of how massive this company is, and to see that this company has fallen down by over 60% from its all-time high, it's something that must just show you that this is a good opportunity. Yes, that I know that one of the things that is impacting the shares of Naspers is because number one, of course, is the Tencent issue. Number two is the fact that you remember that one of its subsidiary, which is Process, which is also listed in the JSE, found themselves having some investments in Russia, which of course during these tensions they ended up selling those or some of those investments, which of course since Process it's a subsidiary of Naspers, we found the shares of Naspers also being impacted by that. Now, of course, that had, like I said, it had an impact because you remember that most of the companies in Russia, in terms of the share prices, they fell down sharply after the war started. But of course, this is a company that I still believe, like I said, is going to recover and is going to still do very well in the years to come. This is a company that is just to do very well. I mean, this is a company that I'm going to continue loading the boat because I still believe that we are going to see even new highs. So that over 3,500 52-week high, I still personally believe that Naspers is still going to go back there and pass that 52-week high. Now, you remember that Naspers also pays out dividend. I mean, they've got a dividend yield currently of around 0.4%, which is, of course, this 0.4% is relative to the stock price, which is something that I think it excites investors, especially when they see that they are investing in stocks that pays out dividend. Because I must say that I've seen that some of the people, or at least I can say most people, I think they enjoy sort of like also investing in stocks that pays out dividends. So both these stocks that I discussed, Sibanye and Naspers, they pay out dividends, which is something that is truly amazing. Now, these are the two stocks that, ladies and gents, I added or I loaded more or added more holdings because of the fact that their share prices are dropping. I mean, today as I'm talking to you, I'm thinking that maybe I should add more of Sibanye, because again, this is a company which is just set to do very well, and I've discussed with you already. Now, I'm thinking of probably loading or adding more of Sibanye because again, I believe that this is one of the companies that will do very well. Otherwise, with all that, guys, I make tons and tons of stock market investing videos, and if you think that this video was amazing, please don't forget to hit that like button, and if you're new, don't forget to hit that subscribe button and click that notification bell so that YouTube can notify you every time I drop a new video. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey. And like I always say, before you load the boat, please do make sure that you do your own due diligence so that you can be comfortable when you are investing into this stock. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.